Assalamu alaikum. I hope all of you would be doing well. I welcome you all on this a quick discussion on the changes in the tax rates from fiscal year 21-22 or Finance Act 21 to fiscal year 22-23 or Finance Act 22. So let me have a very quick summary, a discussion on the changes which takes place between the previous Finance Act and this Finance Act. Just to highlight, this Finance Act is applicable for the exam setting in June 23, September 23, December 23, and March 24. So anyone who is taking exams before this, June 23, or after March 24, this video is not relevant for those students. Okay. So let me start discussion on the key areas of the change, key areas where the changes have been taken place in the Finance Act. So the first area where the change has been taken place is income tax. What the change has taken place in the income tax, the in income tax, the tax bands are same, the normal tax rates are same. The only change is the change in the dividend rate, the tax rate of dividend. And previously, the tax rate of dividend was 7.5, 32.5, and 38.1. And now the revised tax rates for dividend are 8.75, 33.75, and 39.35% respectively. The standard tax rates which should be given to you guys in the exams would be for basic rate from 1 to 37,700, normal rate, dividend rate, high rate, band, normal rate, dividend rate, additional rate, normal tax band, normal rate, dividend rate. Even there is no change in the nil rate bands of the income. So the savings income nil rate band or exemption for basic rate taxpayers remains at 1,000. For high rate remains 500. And for additional, there was none earlier and this time as well. Whereas for dividend, the dividend nil rate band remains 2,000, and the 0% band for dividend for interest income for savings income is still 5,000 if it falls under the uh, 0 to 5,000 band. So let me quickly learn very quickly, and again not very much learning, but even then I want to demonstrate what will be the changes in the what will be the changes in calculation with respect to the changes in the tax rate. So let's start looking on those lines first, then we'll talk about further. Uh, let's look at some of the examples where the change has taken place. For the tax year 22-23, Ezra has a salary of 62,500 and dividend income of 3,800. Her income tax liability will be. So I'm going to prepare the pro forma to calculate income tax, which is like other income, or you can call it as non-savings income, dividend income. I'm not going to prepare the column of savings income since there is no savings income in this example. And then total income. Uh, employment income. Employment income is like 62,500. Dividend income. As a result, total income is it is 66,300. If there would be any casting error, please apologies in advance. Since there is no qualifying interest type of thing, so whatever is the total income would be referred as my net income. From the net income, I deducted the personal allowance. The personal allowance is same, which is like 12,570 as earlier. It will be first deducted from the other income, then if savings income, then if dividend income, right? Then I have the taxable income. The taxable income 49,930, 3,800, and the sum is 53,730. Now let's start applying the tax rates over here up till 37,700. The rate of tax would be like 20%. So which is like 7,540. Then the other income is 49,930 minus 37,700. The amount which exceeds from the basic rate is 1,230. This gonna tax at the rate 40%. So the 40% amount is 4,892. Then for dividend, there will be dividend exemption or dividend nil rate band, whatever you name it. That is like 2,000 at the rate nil. So that turns down to be 0. Then the total dividend is like 3,800, out of which 2,000 falls into the exemption. As a result, the amount which gonna tax is at the rate. As a result, if I look into this, the income tax liability amount, allow the casting error on my end, please. Uh, I hope like that, sorry, that's not 32.5, that's my bad. It's 33.75. Answer remains the same. Let's look towards the example 2. In example 2, it's basically for the tax year 22-23, Arika has a salary of 44,000 and dividend income of 8,500. Her income tax liability will be, so what will be her income tax liability? So I'm like other income, dividend income, and then a total income. Salary 44,000, 44,000. After the salary thing, dividend, which is like since no other income, so I'm making this as total. And since there is no qualifying interest, so I'm assuming whatever is total is my net income, which is like 44,000, 8,500, the sum amount 52,500. Then from the total net income, I deducted the personal allowance, which is like 12,570. Nothing to be deducted from here. Taxable income amount. Okay, on this taxable income, I'm going to start applying the tax rate. So it is like 3, 1, 31430 at the rate 20%, so which is like 6286. Then the 2000 dividend exemption, so that works out to be nil. Then available basic rate band. So the basic rate band is 37,700, out of which 31430 has been covered by the other income, 2000 covered by the dividend exemption. So the amount which is available in the basic rate is 4270. This 4270 gonna tax at the rate 8.75. So the 4270 at the rate 8.75 is 374. Then let's look into the thing, how much dividend is left. So the total dividend is like 8500, out of which 2000 is exempt, out of which 4270 falls into the basic rate. So the amount of dividend which has to be taxed is like 2230, and this would be taxed at the rate 33.75. As a result, this amount 753, income tax liability amount 7413. So if you guys look into this, the dividend piece, there is only change in tax rate. So nothing conceptual change. I won't say this as conceptual change. That's purely an operational change where you were supposed previously to apply the tax at the rate up 7.5, 32.5, 38.1. Now you are supposed to apply the tax at the rate 8.75, 33.75, and 39%. So that's the change in the income tax only. Nothing else has been changed. Moving forward, the next change which we can see is in the calculation of employment income. So what is the change in employment income? In the employment income, there is only one change, and then the only change is in the benefit percentages or notional amount of car benefit, fuel benefit, van benefit, and van fuel benefit. So let me first look towards the what is change in the car benefit calculation. That will talk about the notional things. I hope you guys recall that the car benefit is calculated as cost of car multiplied by CO2 emission percentage. The CO2 emission percentage is bit changed, and what is changed in the CO2 emission, the revised tax rates for the CO2 emission are as follows. What are the revised tax rates? The relevant base level of CO2 emission is 55 grams per kilometer. So if the CO2 emission of the car is from 51 to 54, it's 15%. If it is more than 50, if it is 55, 16%. After 55, on increase of every complete 5 gram per kilometer, 1% goes up, right? There was a concept of zero CO2 emission cars. So if electric car with zero CO2 emission, it is now 2%. Previously, it was 1%. And for hybrid electric cars with CO2 emissions between 1 and 50 gram per kilometer, the electric range of car is 130 miles or more, 70 to 129, 140 to 69, 30 to 39, and if it is less than 30. Needless to say, this will be provided in the exam. So nothing to worry about how to memorize this. That will be given in the exam. Then the next discussion is around the changes in the car, van benefit, and fuel benefit, i.e. the amounts which are the notional amounts. So the base figure for calculating the car fuel benefit is 25,300, whereas it was previously 24,600. And the van benefit scale charge is 3,600 and the fuel thing is 688. And the vans which produce zero emissions have a 0% benefit. Again, the tax authorities are encouraging the low or nil emission cars or vans type of things. So again, if you ask me, that is pretty much like an operational change rather than a conceptual change, because because it is something it is something which will be given in the exam. Nothing much concept to apply. You just need to be careful. Like previously, if you were applying uh, uh, 2%, then you need to apply 3% and stuff like that. The RD, non-RD, two concept remains the same. If a car is diesel car, you are supposed to add 4%. All such things are same. So these percentages apply to petrol cars and diesel cars meeting RDE2 standard. Mm, If no RDE2, then the percentage is like P plus 4%. The P is in like petrol plus 4%. Then still maximum is 30 37%. So again, no major, no material change. It's majorly same as the previous Finance Act. So let me quickly look into an example which will guide me how these changes are applied in the question. So during the tax year 22-23, Fashionable PLC provided the following employees with company cars. Amanda was provided with hybrid electric company car throughout the tax year 22-23. The car has a list price of 32,200 and CO2 emission rate of 24 gram per kilometer and electric range of 90 miles. Since electric range of 90 miles, 24 grams per kilometer, so it is like in between of 0 to 50 grams per kilometer. 1 to 50 gram per kilometer. Electric range of 90 miles. Electric range of 90 miles means somewhat falls over here, means the CO2 emission percentage would be 5%. So if I look into Amanda, the cost of car for Amanda is like 32,200. The CO2 emission based on 24 gram per kilometer with 90 miles of range, this translates into 5%. So for me, the car benefit would be 32,200 multiplied by 5%. Do I need to month apportion it? So there is no need to month apportion because it is like for whole throughout the tax year. So I need to calculate the benefit for whole of the year. So this works out to be 1610. Next, Betty was provided with a new diesel company car for whole of the tax year 22-23. So car is for whole of the tax year and the car is diesel car at the moment. The car has a list price of 16,400 and CO2 emission rate of 99 gram per kilometer. The car meets the RDE2 standard. So I hope you guys understand that if car meets the RDE2 standard, no need to add further 4%, right? So the the car benefit calculation would be cost of car 16,400, the CO2 emission would be so it's 99 minus 55 divided by 5. That works out to be 8.8 since I have to round it down. So I'm ignoring 0.8. So 8 plus 16, 16 is the base percentage picked up from here. So as a result, the CO2 emission percentage is like 24%. The car benefit would be 16,400 multiplied by 24%. Since the car was whole of the tax year, so no need of month apportionment. As a result, car benefit amount 3936. Just to give you a reference, just to give you a reference, no need to add 4% as car is RDE2. If the car is not RDE2, I would have added 4% further over here as well, right? The next is Charles was provided with a new diesel company car on 6th August 22. The car has list price of 13,500 and CO2 emission of 102 gram per kilometer. The car does not meet the RDE2 standard. So for here, cost of car is 13,500. CO2 emission is 102 gram per kilometer, and it is like 102 minus 55 divided by 5. So it is 9.4, 0.4 ignored, plus 16 plus 4. So the CO2 emission percentage over here is 29%. So for me, the car benefit would have been calculated as 13,500 multiplied by 29% multiplied by the car was provided on August 6th August. So it's like August, September, October, November, December, Jan, Feb, March. So I'm talking about 8 months. So the benefit for 8 months amount 2610. Then last, Diana was provided with a new petrol company car throughout the tax year 22-23. Throughout the tax year petrol car. The car has a list price of 84,600 and an official CO2 emission rate of 178 gram per kilometer. Diana paid Fashionable PLC 1200 during the tax year 22-23 for the use of car. So the cost of car is 84,600. CO2 emission is 178 gram per kilometer. So it is 178 minus 55 divided by 5. So it is 24.6.6 ignored. 24 plus 16 is like 40%. Since it's 40%, so I need to restrict it at 37%. So for me, the car benefit would be 84,600 multiplied by 37%. So 84,600 multiplied by 37% is 31302. 31302 less reimbursement. So the reimbursement is by the amount 1200. This one, as a result, net benefit is 30102. So I hope that the changes in car benefit calculation would be like pretty much clear. So no major queries in that. Moving on towards the next aspect of this, which is basically the fuel benefit. Amanda was continuing with the above example, example number 3. Amanda was provided with fuel for private use between 6th April and 5th April 23. So if I look into Amanda, so for Amanda, the scale charge is 25,300. CO2 emission percentage for Amanda was 5%. Uh, since it is for whole of the tax year, so I'm multiplying, dividing it by 12. As a result, this amount 1265. Then Betty was provided with fuel for private use between 6th April 22 and 31st December 22. So now if I look into Betty, it's 25,300 multiplied by the CO2 emission percentage for Betty was 24%. So I multiplied it by 24%, and fuel is from 6th April to 31st December. So it means the fuel is for a period of 9 months. So for 9 months, the benefit amount, so the fuel benefit would be like 4,554. Then Charles was provided with fuel for private use between 6th August 22 and 5th April 23. So again, the Charles is like for 8 months. So 25,300 multiplied by the CO2 emission of Charles, 29%. So multiply by 29%, multiply by 8 upon 12. So for 8 months, the benefit amount 4891. Last, Diana. Diana was provided with fuel for private use between 6th April 22 and 5th April 23. She paid Fashionable PLC 600 during the tax year 22-23 towards the cost of private fuel, although the actual cost of this fuel was 1,000. So if I look into Diana, 25,300 is the scale charge multiplied by CO2 emission percentage for Diana was 37%. So into 37% multiplied by 12 upon 12. So this amounts 9361. And for reimbursement, so I'm like, since D as in Diana made partial reimbursement, hence it is like not allowed, because in case of fuel benefit, only complete reimbursements are allowed, partial reimbursements are not allowed. So I hope again the change in the fuel benefit thing would be pretty much clear to you. So not again, that's not a major change, that's not a conceptual change, I would say. That's only something which is basically like the operational change only. So moving forward, the next change is in the rates of NICs. And the rate of NICs are like, again, that's also an operational change, nothing conceptual. So in this change, what is basically change? So for class 1 NIC, the 0% band is now till from 1 to 570, nil percent from 12,570 to 50,270 and 50,270 above. So now they have linked this nil percentage with the personal allowance limit, nothing else. Employer has always a different rate. So it is 15.05, employment allowance 5,000. For class 1A, it is still 15.05. So class 1 employer rates are always same. So the rates are same. Class 2, 3.15 per week. Lower profits threshold. So previously this lower profit threshold again was an unknown number. But now the tax authorities have linked this number as well with the personal allowance limit. So class 4, again personal allowance limit, 10.25. right? So let me apply these changes as well. So Jimmy and Jenny are both self-employed. Their trading profits for the tax year 22-23 respectively are 25,000 and 60,000. So it is like Jimmy and Jenny, 25,000, 60,000. The class 2 and 4 NIC liabilities will be. Now, if I look into Jimmy, class 2 NIC would be, so both are above the smaller profits threshold amount. So since I repeat, both are above the smaller profits threshold amount. Since both are above the smaller profits threshold amount, so both are supposed to pay the complete NIC. The complete NIC is like 3.15 multiplied by 52. So for 52 weeks, make it round. So make it round. The class 2 NIC is like 164 for Jimmy, 164 for Jenny. Whereas class 4 NIC, so if I calculate it over here, till 12570, it is 0%. So nil, nil. Then it is Jimmy is 25,000 minus 12,570. Whatever is the amount, would gonna tax at the rate 10.25. So whatever is the amount would gonna tax at 10.25. So which amounts 1274. Whereas if I look over here, it is 50270 minus 12570 at the rate 50270 minus 12570 at the rate 10.25%, which is 3864, and it is 60,000. So 60 minus 50270 at the rate 3.25%, which works out to be 316. And the sum of this amount 4180. So this is the class 4, this is the class 2 NICs, and these are the class 4 NICs. Again, if you notice, please, I'm continuously focusing. So that's the only change in the class 2 4 NIC. Let's learn the change in the class 1 NIC as well. So in this, for example, Simon Limited has 3 employees who are each paid 60,000 per year. One of the employee was paid with the following taxable benefits during the tax year 22-23. Company car fuel, living accommodation. The class 1 and class 1A NIC liabilities will be. So let me first calculate employee class 1 NIC. Employee class 1 NIC is up to 1 is like 0%, which translates into nil. Then 50270 minus 12570 at the rate 13.25, which is 4995. Then 60,000. So 60,000 was the salary per employee minus 50270 at the rate 3.25%, which works out to be 316. As a result, this total amount then total class 1 employee NIC would be, it's 5311 multiplied by 3. So it's basically, then the next is, let me start my working from here. The next is employer class 1 NIC. The employer class 1 NIC would be up till 9100, it is basically 0%, which works out to be nil. Then employer is paying salary of 60,000. So the gross cash earnings is 60,000. So 60,000 minus the 0% band, whatever is the difference, would gonna NIC at the rate 15.05%, which works out to be 7660. Then total employer NIC would be 7660 multiplied by 3. So 7660 multiplied by 3 would be 22980. Of this, I deducted the employment allowance. Employment allowance is like 5,000. We noticed just few moments ago. So the amount payable would be 17980. Then class 1 ANIC. Class 1A, for class 1 ANIC, I need to sum the net taxable benefit. So the net taxable benefits, the sum of net taxable benefits should be 14425. So 14425 would gonna NIC it at the rate 15.05%. So which works out to be 2171 to be round. So this is the basic simple calculation of the NICs, nothing changed, nothing very much to highlight, nothing very much to explain, just some of the sweet and simple changes in the tax rates. Having said all that, having discussed all that, there are certain areas where there is no change. So in the personal allowance limit, there is no change. So personal allowance limit was 12,570. There is no change in the personal allowance limit. Uh, there was for a tapering thing to happen, there was a threshold of 100,000. No change in that. The transferable amount of personal allowance, which was 1260, no change in that. So there is no change in the NIC related any kind of limit. So the tapering and transferable amount of personal allowance, no change in that. Resident status. So to qualify for a person to be UK resident or not, we look for the TICE test. If not met under the auto residency, auto non-residency test. So while looking towards the TICE test, for example, if a person, then we need to look for the previously resident table, not resident table. So there is no change in that table. For individual savings account, there was a limit of 20,000 that remains intact, no change. For rent a room, the limit for a relief was 7,500, no change. For pension related limits, for example, the annual allowance limit 40,000, no change. The minimum tapered limit 4,000, no change. The threshold income, no change to 40,000. For pension and lifetime limit 1073100, there is no change. Higher of 3,600 relevant earnings. So in the 3,600, no change. So there is no change at all in any of the pension related limit. Then approved mileage allowance for cars. There is no change in that. For example, from 0 to 10,000, 45 pence. For 10,000 above, 25 pence, no change. In capital allowances, SBAs, AIA, first year allowance, motor cars, everything is same. There is no change at all. For cash basis of accounting, for trading income, we can join cash basis of accounting if the revenue is less than 150,000. So that will be given in the exam and there is no change in that. Cap on income tax relief higher of 50,000 or 25% of other total income remain same. The rates relating to corporation tax, the corporation tax rate 19%, threshold income 1.5 million, no change. For VAT, the standard rate of VAT 20%, registration limit 85,000, deregistration limit 83,000, all things are same. Inheritance tax, nil rate band 325,000, RNRB 175,000, there is no change. Inheritance tax, taper reliefs starts from 3 years, goes up till 7 years from 20% every year, increase by 20% to 80%, no change. Capital gains, tax rates are same. For example, basic rate 1020, if residential property 1828, annual exemption 12300, all same. In even in capital gains, the BADR investor relief amounts, tax rates, all are same. Penalties for errors, deliberate, conceal, deliberate, not conceal remains the same. So there is no change in that. Official rate of interest, 2%, no change. Where this official rate of interest is used, it is used for the loan benefit, for the expensive accommodation. Rate of interest, the rate of interest on underpaid text, there is a small change. It is 3.2% to 5%, and previously it was 2.6%. So if you recall, this standard rate of interest is applicable on all kind of late and or underpayments. So on overpaid tax, HMRC refunds me and the refund percentage is same at 0.5%. So nothing major changes in this Finance Act. Even if someone wants to have a look on what are the new revised tax rates to be exact, he or she can access to this link. These are the file names. These are basically inserted as an hyperlink so you guys can access directly. I'm done with all of this discussion with relating to the changes. Just want to share one last thing from my side. At times, I have been asked by so many students, so many of my colleagues, so many of my access students that, sir, is it really necessary to buy a new exam kit, a new textbook for this Finance Act, for example? So answer to this piece is, uh, preferably, yes, you should buy the new exam kit and new book, preferably. But if someone has any difficulty in accessing the book, be it in soft copy or hard copy, and there is some other issues, for example, financial issues, she not able to arrange the book kit, then as a last option, even with a heavy heart, I allow to use the same textbook, but never ever advise to use the old exam kit. So I always advise to use the updated exam kit, because as a student, as a human psychology, once I attempt the question, whether if the question is right, it gives a comfort to me. But if my answer is wrong, I got worried. And you guys being a student, you are not in a capacity to judge whether this wrong answer is on account of change in tax rate or it is basically your error. So to avoid that thing, basically it's important to use the updated tech exam kit. As a last resort, I am fine with the old textbook. However, not preferred, but as a last option, that's fine. But for exam kit, not at all. If someone has any difficulty in any area of the TX, please feel free to reach out. Thank you very much for watching this video. Stay blessed. Take care. Thank you.